What is the three-touch strategy? Where should we look for sell trades so that our stop loss doesn't get hit? Hi, I'm Tradeology, and today we'll learn a powerful strategy together that gives us very big rewards. I'd appreciate it if you like this video and subscribe to my channel. Okay, let's move on to step-by-step teaching of this strategy. Imagine this chart in front of us. The first thing we need to do is analyze it in our own style and draw strong levels so that we know where we are. And of course, this helps us understand the possible direction of movement. The strategy we're going to learn is a counter-trend strategy. But if you reach a professional perspective, you can later use it in the trend direction as well. The first thing we need is for the price to have hit a strong high. Instead of entering a trade with the first counter-trend candle, we wait. We wait for a price retracement to form. Price goes up again and even breaks the previous high. Should we sell? Even strategies based on liquidity that claim to know the direction of smart money enter sales at these points. But what do we do? Still waiting. We even consider the next drop as just a retracement and believe that price should go higher than the previous high. This is exactly what happens. Pay attention, now we basically have a channel, a wedge. This pattern has several properties that tell us the probability of a drop is increasing. The first is that if the uptrend was strong, the price channel would form parallel or even steeply upwards. Whereas this pattern shows that price doesn't have the power to form very strong highs. The next point is that this pattern has formed at a top, which increases the validity of this pattern multiple times. So make sure to look for this pattern when you are under a strong resistance. If there is no resistance, a wedge pattern might form, but it probably won't have a strong drop and the probability of hitting stop loss increases. The third and important point is that a three-touch has formed. This is a very famous and old pattern that is also important for professional traders psychologically. I know many pro traders who love this pattern and only draw the upper line because they're waiting for price to reach the third high and eagerly look for a sell at good points on the third touch. But when price reaches the third high, by seeing good candles, a lower high, or even an engulfing pattern, you can enter. But be careful. This pattern is a counter-trend pattern. What does that mean? It means that the rewards in this pattern are very good and you can get big rewards. But since you are trading against the trend, the number of your stop losses might increase a bit. The drop in this pattern is usually sudden and sharp. But this pattern often causes problems for those who enter trades recklessly because it hits their stop losses several times before dropping. I personally don't even sell on the third touch. I wait. I love this pattern when I see it even fakes out the third high upward and tricks everyone. While I've already taught you in previous lessons how not to fall for these fake breakouts, you can take the best advantage of this opportunity. Where I personally open these trades, I'll leave the registration link in the description of this video. Now I want to tell both pro and beginner traders exactly how to enter. Let's start with beginner traders. You dear beginners should wait for the bottom of this pattern to break downward. This breakout should not happen with wiki candles, but with good candles. Still, you have to wait. If you knew how much waiting can work miracles, you'd always do it with enthusiasm for every trade. Wait for price to retest the broken line of this pattern. Or you can draw a trigger line. With the breakout of this line, you can enter the trade. As for where you set your stop loss and take profit, I leave that to you, but make sure to backtest. Trust me, if you backtest, you will definitely be able to trade this pattern more effectively. So the entry method for beginners is clear. Now let's move on to pros. I want you pro traders to learn the fake breakout in this pattern too. In fact, you should mostly trade like beginners, but you should also have the ability to spot the start of strong moves. But this isn't a must, and if you're not comfortable with the method I'm going to explain, there's no problem at all, just stick to the breakout and retest method. But who doesn't like to enter at the start of the move? Okay, please listen carefully. In this pattern, price sometimes tries to break the pattern upward, but you know that this candle still tells us the breakout upward is not confirmed. And we also have a strong level, and we're experienced enough to know exactly how a level breaks upward. So beginner traders get tricked here and enter buys, but we stick to the waiting strategy. Now it's very important to pay attention. Look at what kind of candles are forming. Do you think these candles are a bullish breakout? Absolutely not. I've told you before how a breakout should happen. We should see at least 3 or 4 strong candles that break the level upwards. This is a strong filter. So my expectation is that as a pro trader, you still see these candles as sell opportunities and wait for a good bearish candle. By a good bearish candle, I don't necessarily mean a very big candle. You're pros, and I prefer you to even enter if you see a medium-sized candle that has engulfed the previous one, and it's okay to set your stop loss a bit wider. By the way, let me tell you, in this very first example, I've taught you the hardest type of this strategy, while others do exactly the opposite and try to make trading look easy, but it's not like that. In most of these patterns, the touches happen relatively cleanly, and you can enter on the third high. I have a habit of always giving you hard examples so that you can trade better and know more facts. Now let's take a step back and review a move. Price moves strongly upward, the three-touch pattern forms, and from there, price moves downward and reaches an important level ahead. The important point is that this pattern doesn't always form. Sometimes a double top forms and price drops. Or even with an engulfing candle, price drops. The three-touch strategy is a method of trade entry, and if you're going to trade it, you shouldn't think about other entry methods. I'm saying this for beginner and intermediate traders. Absolutely, you dear ones must trade only one strategy. This strategy definitely needs backtesting and forward testing to see how successful it is and what the average rewards are. For any strategy, to turn it from losing to profitable, it's enough to add a few simple filters. For pro traders, I'll make a pro section in the future so you can trade this pattern in the trend direction too and enjoy the facts in this profession. Please practice this pattern a lot on your charts, and try to personalize good entry points so that your stop loss hits less and your take profits are bigger. I hope you enjoyed this lesson. If you did, I'd appreciate it if you liked the video, leave a comment, and subscribe to my channel. Wishing you success.